Hey, what's going on, ladies and gentlemen? ANZD here with you, and in this video, I'm going to be talking about the CPI data, the CPI data for the month of May, which came out, and we're going to get this news from CNBC.com. So if you want to go ahead and check out CNBC.com, the economy page, shout outs to Jeff Fox that did this report right now. And what it's saying is that inflation rose at 4% annual rate in May, and that's the lowest percent year to year over the last 2 years. So since 2021, about summer of 2021, this is the lowest that we ever seen inflation over the last 2 years. So that means inflation is at 4%. So let's go over some key points about this inflation and what's going to be going on in this report. So the consumer price index increased just 0.1% for the month and 4% for a year ago, the latter being the lowest level in about 2 years. Excluding food and energy, core CPI rose 0.4% and 5.3% respectively. All the numbers were in line with consensus estimates. So the 0.4%, that's the core CPI without food and energy, but with food and energy, as you can see, it's 5.3%. So we're still gonna have some work to be done. Following the release, market price in a nearly 100% chance that the Federal Reserve will not raise interest rate this week. Well, we have the CPI report that's out now, but along with that, what else is going to be going on this week? They have the FOMC meeting, which will be conducting over the next couple of days, and after that, I think it will be Thursday. Then they would decide if they're going to pause on the rate increase or will they be raising it another 0.25% or 0.50%. But most people are saying that there will be a pause, and if not a pause, then it will be a 25 basis increase. But if we have the pause for this month, then at the next meeting, they might raise it to 50 basis point, which is 0.50%. So let's get more into the data of what this report is saying. So the report from CNBC is saying that the inflation rate cooled in May to its lowest annual rate in more than 2 years. Wow, that's some good stuff right there, because inflation be going up and up month over month, year to year. So likely it's going to take pressure off the Federal Reserve to continue raising interest rates, the Labor Department reported. And remember, we had the job reports that came out last week also showing that the job market is good, that there's jobs being added to the job market, but at the same time, unemployment was high. So these numbers be crazy, and it all comes down to what the Federal Reserve will be deciding. So the Consumer Price Index, which measures changes in a multitude of goods and services, increased just 0.1% for the month of May, bringing the annual level down to 4% from 4.9% in April. Good thing. That 12-month increase had the smallest since March of 2021, when inflation was just beginning to rise to what would become the highest in 41 years. So back in 2021, inflation started to rise. They started to do quantitative tightening, squeezing down on printing out money and different things of that situation, which made the market more tighter. Inflation went up, and just a wide variety of things that making the Federal Reserve increase their Fed rate. So excluding volatile food and energy prices, the picture wasn't as optimistic. So-called core inflation rose 0.4% on the month and was still up 5.3% from a year ago, indicating that while price pressure have eased somewhat, consumers are still paying higher prices, and consumers are still under fire because we're still spending money. The prices are still going up. People still have good jobs. Wages are going up. Even though unemployment is going up, they still put those numbers into deciding whether they're going to raise the interest rate or not. So let's get back into the CPI data report. All of those consumers were exactly in line with Dow Jones consensus estimates. A 3.6 slide in energy prices helped keep the CPI gain in check for the month. Food prices rose just 0.2%. However, a 0.6 increase in shelter prices was the biggest contributor to the increase of all items or headline CPI reading. Housing-related costs make up about 1/3 of the index weight. So if we base in the CPI data a lot on housing, so that'd be rent, utilities, household goods, foods, etc. Inflation is still kind of high if you want to look at it from that point of view. So elsewhere, used vehicles prices increased 4.4%, the same as in April, while transportation service were up 0.8%. So like you said, like you've seen with this report, 4.4% with used vehicles. So that's also is keeping the inflation up. So we got rent, housing costs, as well as used vehicle costs is also what is keeping inflation up. The market showed little reaction to the release. You know how Wall Street is, sometimes they don't really act to the news, despite it expected prominence in the decision that the Federal Reserve will make at this week's meeting regarding the interest rate. So they probably didn't do too much in regards to the CPI data because they want to weigh out what's going to go down at the Federal Reserve meeting, which is happening this week. And I believe they will get the meetings and we'll get a follow-up of will the Federal Reserve be increasing the Federal Reserve interest rate or not. So the stock market futures were slightly positive, though Treasury yields fell sharply. So we got to check out them Treasury yields. We got to check out them T-bills, them Treasury bonds, what you got in there, see how it's going. So pricing did shift notably in the Fed funds market, with trading prices in a 93% chance the Fed will not raise benchmark rates when its meeting concluded Wednesday. So what that is saying, okay, well, so the meeting will be Wednesday. Oh, yeah, that's right around the corner, right after the CPI data. We're gonna have the FOMC meeting basically the following day. And what it's saying now is that the market is basically was pricing in the idea that the Federal Reserve was not going to be raising interest rate at this meeting. So let's see what else is going on. The encouraging trend is consumer prices will provide the Fed some leeway to keep rates unchanged this month. And if the trend continues, the Fed will not likely hike for the rest of the year, said Jeffrey Roach, chief economist at LPL Financial. So shout out for them for that info right there. But I don't know if the Federal Reserve is going to pause for the rest of the year. Let's get into some more information. The tame CPI reading was good news for workers averaging average hourly earnings adjusted for inflation rose 0.3% on the month, the Bureau of Labor Statistics said in separate release. On an annual basis, real earnings are up 0.2%. That's a good thing after running negative for much of the inflation surge that began about 2 years ago. The Consumer Price Index report features a growing discrepancy between the core and the headline numbers. The all-item index usually runs ahead of the ex-food and energy measures, but that wasn't the case lately. The year-over-year discrepancy between the two measures stems from gas prices that were surging at the time in 2022. Ultimately, prices at the pump would exceed $5 a gallon, which had never happened before. The U.S. gasoline prices have fallen 19.7% over the past year. Tuesday BLS report shows. So that's a good thing. Gas prices went down over the year, and that's going to be a real good thing. So food prices, however, were still up 6.7% from a year ago, though eggs fell 13.8%, which is good because remember, eggs was up like crazy back in December. And in May, R was now slightly negative on a 12-month basis after surging a previous month. Shelter prices have risen 8%, and transportation also are up 10.1%. Airline fares also have been retreated, declining 13.4%. So I'm gonna do another follow-up with the CPI data and get more into the labor statistics. So I hope you got some. So ladies and gentlemen, that's an update of the CPI data. Hope you got some value out of this. Please like the video, subscribe, and I'll see you next time. Peace.